Hey, it's Michael Saul with the Stock Market Trading Watch List for Tuesday, October 18th, 2011. Here's my blog. Here's the site to go to sign up for the daily email. And here's my Facebook fan page for the site for all you Facebook users. Let's take a look at the S&P 500. We'll start there. A down day, down nearly 2%. This doesn't really show an accurate depiction of what happened during the day, though, because we gapped down, and the S&P rarely shows gaps. But we gapped down. We could barely budge early on. We really couldn't get much upside. Didn't fill the gap, and we just went into a downtrend for the day. Down, let's see, decliners, best and advances, I think were minus 1,800, and volume actually came up. Now, still, volume's been relatively light, okay, over the past several sessions. Here's the New York volume. Right? So we've seen it hasn't really been much, except for this day on the 12th. Okay, so what's going on here? Well, the pullback that I've been watching for appears to have started. I'm going to watch these moving averages. The 10 and 20 will get some respect, but I think it's going to make it to at least the 50. Then we have the retracement of this big push up, 1167, 1149, 1131, and 1106. I want to watch this pullback. I want to see if volume rises on the pullback. I want to see if breadth is stinky or, showing downside leadership. And, okay, the volume was higher, so I guess you have to say, okay, there you go, the volume's bearish. And, yeah, it is. It's not good when volume rises, when price falls. That's bearish. But it's not overwhelming here. So, if we pull back and volume isn't that terrible, I'm going to be watching for support to hold and for a potential entry for a bounce. Now, that bounce then becomes the main focus, because if the bounce is on crappy volume, not good leadership, and it just looks like it's there just to correct, then that may offer a really nice shorting opportunity for a bigger push down. Now, I'm not saying right here isn't an area to look for swing shorts. You can, but we have Apple earnings due out Tuesday after the bell, so that may keep at least tech on their I guess on their heels or on their toes, maybe. I don't know. I don't know which one is the proper analogy. So, we'll talk about that in a couple of minutes. But this is the support I'm watching. And, of course, if we just rip through it, if there's, bad news out, if they give up on trying to save Europe, which I believe the German financial minister or something was saying something about that today, that was the excuse for the down day, then obviously things can happen. Here's the Russell down 3.33%. You got 654. 654, the support under these moving averages if the small caps continue. NASDAQ 100 still above the 200-day moving average. That would actually be my first support zone if we got a push down, and then we have these fast-moving averages coming up as well. Dow looks like the S&P 500. Okay, so let's take a look at that. If the chart decides to update. Okay, there it is. A nasty day, down over 2%. Semiconductors down nearly 3%. I'm sorry, down 2.75%. Watch the moving averages as potential support. Here's the banks. All right, I was looking for this little pattern to kind of scribble out to the upside. Instead, it went lower. And I didn't get any emails this time, but a lot of times I'll get emails when I highlight a pattern. They'll go, well, that pattern didn't do what you said it would. Well, okay. But so what? I mean, we're range bound, and yeah, I was thinking this may scribble out if we got some more upside. Well, it didn't, but the pattern didn't fail. In order for the pattern to fail, it would have to cost money. And how it costs money is if it triggers one way and then goes the other way. This one didn't. This just went down. All right, so the banks, not looking so sharp there. Here's Bank of America continuing to pull in. Citigroup had a gap up, but a little bit of a push, but it just couldn't hold. It couldn't keep fighting the tide of the parent index, which is the BKX. And here's JP Morgan. Okay, lower. Looked at this Northern Trust yesterday. Yeah, it's like a pause day. What do we look at Zion too, right? Zion, yeah, with an ugly day, down 4.88%. So that pattern did not work out, did not trigger out. Here is the broker-dealer, also with not a nice day, 2.85%. Cyclicals, All right, down 3%. That's not nice, but we got the moving averages here to watch for potential support. On a test down, here's the XLB. Watch that 20 EMA and the 10-day moving average down 3.4% on Monday. Healthcare. Okay, down 2.75%. Biotechs. Okay, down 2.59%. May want to break out of this range finally. I have to watch this here. All right, this is a nice little range setting up here on the bios. All right, Celgene is one. Let's see. Yeah, it popped out of this pattern. Now it looks like it could be looking to top out. Gold. Yeah, it still looks like it's forming this wedge here. Silver. Kind of the same. I mean, there are a lot of low volatility patterns here. Gold, silver, even oil here. And this could lead to a dynamic move eventually when it breaks out one way or the other. And when I mean breakout, I don't just mean up. It could go either way. Here's the OIH down 4.6%. Some of the oil stocks. Exxon. All right. Yeah, it just looks like it wants to head to that 200-day moving average. Here's ConocoPhillips. Yeah, sitting on the 89. Not doing much. Hess. Hess looks the weaker out of those three that I just looked at. Schlumberger, as my friend would say. I believe the correct pronunciation is Schlumberger. Nice close on Friday above the 50-day moving average, but look at this close. Filled the gap on Monday. It's so hot looking there. All right, let's look at some of the bigger stocks that we watch. Apple with a spinning top on the session. A little lack of commitment ahead of earnings. So we'll see. All right, we'll see what earnings bring. They come out Tuesday night, so tomorrow's video have some comments, obviously, on that. Amazon. All right, pause day. Nice range for a pause day, but it was inside. Goog, aka Googlicious, starting to pull in from the gap, so nice rejection of 600 there. Watch that 200-day moving average, which is right around the gap fill. So if it continues low, I'd be watching that gap fill. I think right here we have about 50% of the gap already filled in. All right, so where did it? That's where it opened. Yeah, just under 50%. All right, okay, Cena. Starting to get some rejection. Right, yeah, this big candle here, though. This looked like such a nice looking bear flag, and then boom. Another example of a pattern I was watching didn't trigger. Went the other way instead with a real big candle to the upside here. Baidu. Okay, right above the 50-day moving average, 78.6% retracement, potential resistance. Research in motion. Looks like starting to roll over again here. Keep your eye on that one. U.S. Steel also looks like it could be ready to roll over. Watch the 50-day moving average above as potential resistance. Here's STLD, Steel Dynamics, into the 50-day. A pretty ugly day, down 4.5%. So this could also be a bear flag. And on these, I mean, we could watch for higher lows. Okay, but looks like these look like they're ready to kind of fall over here. We'll see if we get continuation. So that's it for tonight. Watching to see if we get follow through on what appears to be the start of the pullback. Started on Monday. Let's see if we continue to pull into those support zones and see what we do once we're there. Like I said, if we pull into support, okay, and we get a buying opportunity, and people go, okay, let's try to buy it, but it comes on light volume, and poor leadership could offer a really nice shorting opportunity. So let's see here. Right now, we're still in the range under the 200-day moving average, except for the NASDAQ 100, of course. All right, talk to everybody again on Wednesday. Have a great trading day on Tuesday.